Hey, it's Mike with PriceActionTradingSystem.com, and it's Tuesday. It's November 2nd. This will be our chart lesson for the day. And I thought I'd start out by showing you the daily chart. You can see we're still in this uptrend. I adjusted this yesterday. I had it down like this yesterday, and if you just expand it, it looks like we've got a two-tiered channel here, and we're in the upper half now. So I think this channel is still in play. I don't think we've had a break of it yet or an overshoot of it yet. So this spiking channel is still in play. Where this thing is going is anybody's guess, but you can see how everything's pointed straight up now. And we're a long way away from where we were down here, knocking on the door of 4,200, and now we're over 4,600. So, I mean, it's just a huge move. And there's really been only one minor correction and then one really simple mild correction. Otherwise, it's been all uphill. And so this thing is still going. At this point, I don't see any reason to say, hey, this trend's about to turn back over and correct again. We are in oversold or overbought territory, I should say, not oversold, but overbought. So, but you can see this is accelerating and this is getting further away. So, we're backing off of that some. So there's still room to the upside. I'm not saying we're going any higher. We are at the top of this spiking channel here, this channel. So it wouldn't surprise me if we don't at least correct back to the trend line, but we'll see where we're going from here. But I just thought I'd put this up pretty interesting because it looked like we might be about to top out. And now I'm not so convinced we are yet still. So this thing's still pushing higher. Wouldn't surprise me again if we come back and test this trend line here on this trend channel. But we'll just have to see what happens. So don't try picking any tops in this market. That's all I'll say. I mean, there's absolutely, with all the negative news and all the problems going on, and this thing just keeps marching higher. So just be careful. Anyway, let's go look at the intraday chart. Okay, here is our 2000 tick chart. You can clearly see there was a spike in channel up, and we had a break, a new high, and then we just kind of went sideways after that. Still couldn't even sell off. So you can see there's quite a bit of selling here. This is probably profit taking. And then it goes right back up again, and then we just end up chopping sideways into the close here. So notice that we opened a little bit above the close. The close is the thick line. They're both on the same spot for yesterday. So 3 o'clock and the actual close were at the exact same spots basically. So no change on that today. But notice that we traded higher at the open, and then we came back and tested that close, and then it was all uphill from there. So pretty good, pretty strong day, at least through 11 o'clock or so, and then we just kind of meandered sideways after that. And when you see that, I had a conversation in the forum today. Actually, it was not in the forum, but it was an email with somebody that I passed, and he was trying to understand. It looked very similar to this right here, except this was early in the morning, so it would have been like this, and you had this big move up and then a big move down, and it looked like an uptrend. And he was asking me, how does he know the difference? Well, when you see this EMA looking like a roller coaster and prices shoot up through it and back down through it and up through it and back down through it and up through it and back down through it, that is a range. It might have a slight upward bias or even a slight downward bias, but it's still a range. A trend looks more like this, where most of all your prices are above the EMA and everything's pointing up. And you can clearly see that here. But look how it starts to roll over, and it looks like a roller coaster. I'm talking about the EMA now. And the prices actually look the same way, and they're above the EMA, below it, above it, below it, above it, below it, above it, below it. That's what a range looks like. So some of them are easier to see than others, and more prominent than others, and so just keep that in mind. But this is a skill, and as you do this more and more, you'll get used to it, and you'll start to understand, and it won't be so hard to figure out. But look, when you got an uptrend, you don't get a move straight down like that through the EMA that goes way down here. Something has changed now. It's obvious. And then notice what happens from then on. We're just going sideways, so it's a range. Now, in an uptrend, you might get some pushes through the EMA occasionally like this and like here and like here. But notice that the EMA never really turns down much. It just keeps going up. It may go sideways a little bit, but it keeps going up, and most all your prices are above it. And everything's pointing up for the most part. Now you'll see trends to the downside like this, and most all your price action is below it. That's a downtrend. In the big picture, we still were kind of meandering along here, up and down, up and down. But that's an uptrend, that's a downtrend, but this is still sideways action. Look at that roller coaster, look in the EMA there. So make sure you understand that. Hopefully that the gentleman I'm talking about is watching the video today and he can see that. But it's a skill. It just takes a while to be able to see all this stuff. So, but let's go over the trades and wrap today. Okay, let's talk about the trades here. 7 o'clock came just as we're having this little pullback and making this curve. And notice we're just kind of bouncing off the upper side. We still continue to try to go higher, but generally once you come off the high side, you're probably coming back to the low side unless this EMA can hold. And now this is an interesting one right here. Notice there's a double top right there, and look at all those bars stacked up. And that is, you could say, hey, that's a failure right there when it breaks higher. But all that does is trap people, and it runs right down here to the key entry point, and then it takes off again. Don't get fooled right here. I mean, what you want to see before you take a EMA trade like that is you want to see it bounce a couple of times at least. You get another similar setup right here, but notice you don't have to get long at the very high of this thing. You get a little room to play with here. So, and notice that you've had a few more bounces prior to that. I guess you could argue that maybe, but you can see it doesn't really hold here. It looks like it's bouncing off of it, but it doesn't hold. So I'm just trying to explain this where it kind of makes sense. The real key here is that this is a perfect double top, and you got to go long right into it, and you're not back to the EMA. That's the main thing. You want to see a failure back to the EMA. So you got that, plus you're going long right into the high. So if you took that, you got burned, only to see it go right where you thought it was going to go. Just be patient and wait on a better setup. But you got that failure that fails, so that's really a double trap there. And notice how it rockets down. All the longs get run out right here. And then you really get a kind of a triple test here in that big bullish signal bar. That's a pretty big bar. Let me zoom in a little more here. I'm sorry. That's a fairly big bar, but it does make a double bottom. It's 12 ticks. I like that trade. It's right off the key entry point. It's a very bullish bar. It's a little failed break lower on a triple test. It's probably going to trap some people. I like going long there, and you can see it. They just run everybody's stops. Everybody that got short in here. And then you get a first entry, and then you get a second entry. And so that's a failed second entry short right off the key entry point with another bullish bar. I like going long there again. You got a little room to the high this time as well. You might, if you don't have enough room, you might let it break higher and maybe drop your limit order a tick back in. You wouldn't have got filled much more than that on this one. I don't even know if you'd have got filled on that if you didn't have your buy stop one tick above that bar. But we were only getting first entries here, so when you got that failure, that was a pretty good chance to enter. And then you actually had another failure here, but that's just a little too congested. There is a little room there, and we haven't quite touched the high yet. I just think it's a little risky. It is a pretty good setup as far as, notice how we're kind of starting to bounce off the upper side now. That means the market's fairly strong. So, but that's just so congested. I don't like it. We finally get an overshoot, and then we get two legs back. And notice you got a little channel working down, you get a break and you low. Unfortunately, my signal bar is not good. If you had a good signal bar here, I'd say go long. This one was tempting anyway, but it's just not quite good enough. You get a high or low here. Again, it's an inside bar. It's a neutral bar. It's not very bullish. So again, you just had to wait. But if you wait just a minute, then you get a failure here right off the EMA. That's the better place to enter. Now this inside bar that doesn't break higher concerns me a little bit, but I still like this trade. And it ends up going on. You might have had, depending on how you enter this, you might. What I recommend here, because of the overlap, is to let it break higher and drop a limit order a little bit further back so you got room to get out before this next high. But it didn't matter. It comes back. It still wouldn't have stopped you out, and then it takes off again. And unfortunately, you just keep getting first entries here. This is a fairly strong trend, even though it doesn't look like it. It's real methodical and real slow. So you might have taken this trade. Once you see that once you see that it's a strong trend and that every swing and every, we're making higher highs and higher lows every time. And when it comes back and you get a bullish reversal bar, you may take that trade. You got to really recognize what's going on there, though. I wouldn't take this one, too congested. Not back to the trend line. We just came off the midline, so there's a chance we could be going higher here, back to the other side. But you can see it quickly turns and comes back. And of course, you still would have got a scalp out of it, but I just think it's too risky. Then you get a second entry here, and this one I guarantee you probably trapped a few people. This one was very questionable. When we didn't get back to the high and we turned back down, we're either going to come up short on this end by about that same amount, or we're going to overshoot it by that amount. So be real careful on that, especially when we already had an overshoot. There was just so much momentum. It took a minute, but eventually when you get that overshoot, it means a break's coming soon. Generally, it'll come quicker than that, but this market had a lot of momentum still. But notice how this doesn't close on its high. It actually closes below the EMA. It's got a good bit of stem. It's still a relatively bullish bar. It's still a second entry, but you have to look at the other. Notice how we came up short. So I would wait. This is the place where I'd at least wait on a higher low before I went long. And that will save you from getting burned right there. Now, you may not get a higher low, but that's what I would do. And notice the trend channel keeps holding. And then finally you get a higher low here after bouncing down here at the same support. That's really a triple test right there. There's no setup there. Again, I'd wait on the higher low because of this channel working down. And you get that higher low here. So if we break higher, this thing's probably going higher. So I like entering on the higher low right there. And that's the whole idea behind a higher low, is just to make sure that you don't get burned right here. And you won't always get a higher low, so you got to be real careful with that. But once you start correcting and you're expecting a break of a trend line sometime soon, that's where a higher low, or if you were coming down, a lower high or if the trend was down and you had a little upward correction, that's where a lower high would come into play. You just flip-flop this. So this turns out to be a pretty good move. They still struggle to get through that resistance, but once they did, you can see boom. And they just ran everybody's stops. It's trying to pick tops up here again. That's what causes this big burst, is there's a bunch of sell stops up here. Or, I'm sorry, buy stops from people that are getting short. They thought they'd found the high. They thought this is going to be a sell-off, and you'd be shocked how many people probably get short right down in here, especially this big bar. It's like your exhaustion bar. People are loading up shorts, and they finally run out, and boom, they reverse it. And a bunch of them will exit right here. The quicker ones that want less pain, but a lot of them will put their buy stops right here above this double top. And when it breaks up there, boom, they run their stops. And there's probably a bunch of shorts stacking up here because there's a lot of selling going on to get that many bars in a row. So there's a lot of selling, but still a lot of buying, then boom. And then once they run all those stops, it runs out of momentum and the bottom falls out of it, and that's what causes this big move down here. And just look at it go. And you're coming down, and you actually get a close outside and a new low right down through there. And you had this double bottom, and it's like a little failed break lower being that way. It's really aggressive, but this has been a strong trend, and this is support here. There's a good chance you're coming at least back to the EMA, and this thing ends up going much higher. But there's also a first entry and a second entry right there. So you may go long there too. It's a little aggressive, but you may go long there. There's still plenty of room back to this high, and it is a failed second entry short. And of course, we run on up. We make this high, we make a lower high, and then we make a third attempt with a third lower high that breaks higher and fails and turns down. Look how bearish that is. This is one you may wait till it closes. The only problem is by the time it closes, well, this is another 12 tick, so we've seen much bigger bars, but I like going short there because what's happened is you've got the longs thinking we're headed back up again, and when they get trapped right there and they realize that they all have to run out. When this breaks higher and instantly turns and goes down, a lot of these longs realize they're on the wrong side. They got to exit because they can't take a chance of this being the high of the day and reversing on them. It actually just makes two legs down and then finds a little support and goes back up again. In the end, it's just kind of a range across here. So you might have even moved this down a little more. Really, you get most of your touches and closes right along there. That's where I like it. And you can see that pretty much is the midpoint where we're turning and bouncing as well. So anyway, that's what I saw. There wasn't much happening after about 11 o'clock. We maybe had one more trade. When you get in a range like this, you need a good setup off the highs or a good setup off the lows. This is one that you might take. Notice you got that low and you try to go lower once, twice, and this is a range, so when you're in a range, you don't worry about that EMA as much. But notice how it was holding all down through there. That concerns me right there. But the fact that it tried to go lower 3 times and failed and gives you such a bullish bar, there's some reason to like that, especially because it's setting up like a range. So we're probably headed to the other side. So you may take that one. I'm a little hesitant to mark it, but if you understand what's going on there, you might take it. It's just, again, normally on a range, you don't worry so much about the EMA, but notice how it was holding all down through there. That's a concern. If it was like here where it shoots right through, or right here where it shoots right through, and notice even right here it shoots right through, but right in here it's not doing that, and that's a little bit of a concern because it could hold again and turn down. We do have, there's some other reasons I like this one because you got the channel coming down. We do have a break and a move to a new low, and we tried to go lower twice more and failed. So there's a good chance we're going higher there, but it's just not a ideal setup. Even though the odds say prices are going to go much higher right here, it's not a great setup. So, and there it is, the big picture again. So anyway, nice morning. Not a lot of trades here, even in the morning, but the ones that are here are pretty good, especially the ones off the key entry point. So anyway, that's what I saw today. Not much else we can say about it. It's just a spike in channel that had a break and a new high, and then we just went sideways. This thing just can't sell off right now. It tries, but it can't do it. So we'll see what tomorrow brings. Because we're at we're just above 4,600, and usually once you break above those century marks, you're going to test both sides of that a few times before prices go higher. Now that's usually. Right now, who knows? We might be at 4,700 in a few days, or maybe even less than that, the way things are going. So there's just no stopping this thing. For what looked like was going to be the biggest sell-off, and that the market was finally done, Every time we see that, it's just a great buying opportunity. Eventually, one day it won't be, but every time I've seen it over the last few years, it's just a great buying opportunity. And so until it's not, but every time you see it when it's in real time, it's scary to say, hey, I want to buy down here. But that's why I like to use options in those cases. Use options, and you don't get you got staying power, and you're only going to lose what the option costs you. And you want to buy close to the money options with not a lot of time left to them. That's kind of how you want to play that. So, but don't try to do it with futures contracts, because you can't, if your timing's off, you don't have any staying power. Where with an option, you got some staying power. You can be off a little bit, and you got time, because you can see, if we go back to the daily, because you can see right here, you might have thought, let's just say we had thought this was the bottom, and you bought a futures contract. Well, we went much lower and stayed down there. It would have been hard to ride that out with a contract. But if you'd have used a futures contract, well, and you bought this low down here, well, within 22 days, actually, if you say 23, you were well into the money. And then it's just, so you have a little staying power. And so even if you'd have bought with a 30-day expiration, you still had some staying power. 30 days is way up here. Sometimes you want to buy within 30 to 60 days. That's kind of my rule on it, so that you're not paying for a lot of time. And you can see one contract right there within 30 days would have made you $10,000. So maybe keep that in mind next time we make a huge low like that or a big sell-off. All right, I'm going to wrap it up. We'll be back again to do it tomorrow. I'm done for today. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.